Welcome back, traders, and hope your week is off to a powerful start. This could be another huge week for markets as U.S. consumer and producer price indices are on the calendar. The results may create the ultimate challenge for the Fed. While with weak jobs report behind us, raising the case of a slowing economy, sticky inflation this week could point towards stagflation. That could be one of the toughest market economic conditions that the Fed may deal with, and it could be really difficult to decide policy under this condition. But don't forget that tough conditions also create big opportunities, so assets such as gold and even Bitcoin could still shine in this environment. Now, out of the US, the spotlight will be on the ECB. The central bank is expected to decide interest rates later this week. So at this video, I'm going to break down the setups that I'm watching on euro dollar, gold, and Bitcoin. And starting first with euro dollar and the ECB rate decision. While the central bank is expected to keep interest rates steady, but the big question here is for how long? So for how long will the central bank keep interest rates at the same level? The deposit facility rate is around 2%. And inflation is also around the same level. So far, it seems that steady policy could be the right option. But of course, if the central bank questions further rate cuts, that could help euro dollar to continue higher. And from a technical perspective, we can see that euro dollar is still trapped around this resistance line coming from the 3.5-year high of 1.1828. The price has been consolidating around 1.1728, and despite Friday's weaker than expected non-farm payrolls report, the price could successfully close above this region. So a break above it could be the trigger for a rally towards the previous high at 1.1830, and then above that I expect another consolidation somewhere between 1.19 and 1.1960 before we continue towards the next barrier seen between 1.2060 and 1.21. Now, as we can see, the price is still facing some bullish momentum, is still trying to close above this resistance line. And if we look at the technical indicators, both the RSI and the stochastic oscillator are pointing upwards. The indicators are still in the positive territory, suggesting that upside moves are likely in the coming sessions. Nevertheless, if we hold below 1.1728, well, the price could extend this consolidation phase unless it breaks below the 1.16 and 1.1650 territory. Basically, if it breaks below the 20 and 50-day moving averages, well, that could trigger the next bearish wave. And in this case, I expect a sharp downfall towards the 1.1340 and 1.14 territory, while slightly lower than that, the 200-day moving average at 1.1260 could be also closely watched. And don't forget that the weakness in the US dollar has been a key bullish catalyst in this market. Political uncertainty is still weighing on the euro. We will have a confidence vote in France. So let's see whether fresh political jitters could resurface in the eurozone, limiting any gains in this market. Now looking at gold, well, gold hit a new all-time high following the weaker than expected non-farm payrolls report. The data basically raised the case of economic weakness in the US, and the data have even increased the odds for a sharper 50 basis point rate cut in September. So that helped the precious metal to continue higher. Of course, we also had some demand from central banks, like the central bank in China. It seems that the Chinese central bank is still buying gold, so that further added support under the precious metal, with the price rising above the 3,600 level earlier today. But that's a psychological mark, so we need a clear close to continue higher and reach the 3700 and 3740 area. That could be the next barrier in this market. Well, as regards the US economic calendar, we have the US consumer and producer price indices coming out later today. According to forecasts, the headline CPI inflation is expected to rise to 2.9%, higher than the previous month in July, and producer prices could also remain sticky above 3%, while the core PPI index came out at 3.7% in the previous month. So let's see if we're gonna head even higher. If the results arrive stronger than expected, that could increase the case of stagflation, and that could be a big challenge for the Fed. It would be quite challenging to decide interest rates in this case. But in the meantime, such a result could actually play down the case of a 50 basis point rate cut. So that could create some weakness in the precious metal, although I believe that traders could keep supporting this market as inflation is considered a hedge against inflation. So even under stagflation conditions, gold could still shine, so upside pressures may persist. But from a technical perspective, I would rule out a pullback since both RSI and the stochastic oscillators are already in the overbought zone. So if we fail to close above 3600 in the coming sessions, I expect a pullback. The 3500 level could act as support in this case. If not, then we could continue toward the 3425 level. That could actually neutralize the big picture again. But unless we break the 3275 or 3200 level, this market could stay neutral, so no bearish risks unless we break this floor over here. And we can also see that that the positive slope in the simple moving averages is still endorsing this upward trajectory in the market. Now looking at Bitcoin against the US dollar, well, the king of cryptos reacted positively following the weaker than expected non-farm report, attempting a close above the 20-day moving average, but then at the end of the day it failed to close above it. The weekend has been quite neutral, with the price remaining trapped below this line over here at 111,550. But as we can see, the price is now attempting another bullish breakout, and from a technical perspective, the odds are positive. While looking at the RSI, the stochastic indicators down here, the indicators are sloping upwards. So that increases the case of a move higher. But in terms of looking at the market trend and at trend signals, well, we can see that the price posted a new lower low around 107,450. There is a negative intersection between the 50 and 20-day moving averages, which basically questions the case of a bullish trend reversal. So let's see whether any bullish pressures in the coming sessions will manage to violate this negative trend development over here. From fundamental perspective, there were higher inflows in Bitcoin ETFs over the past week. In contrast, Ethereum ETFs Ethereum outflows staged a record increase. So that suggests that Bitcoin might still be acting as a digital gold. It might be investors might still consider it as a safer crypto option. So let's see if stagflation conditions will benefit Bitcoin. And if we see more progress in the coming sessions, the 50-day moving average could act as resistance around 114,900. Then the 117,000 mark could also act as a key barrier given restrictions around this territory before we head towards the 120,000 mark. But I believe that a break above 123,430 could actually put the market back in a bullish pattern That was a key pivot point back in July, and in August the price fell to pre-new higher highs above, well, to close above this territory over here. So probably investors would like to see a clear close, a sustainable move above this zone before targeting higher levels. Now, in the case that the price closes back below the 20-day moving average, currently seen around 111,550, then the 107,450 could act as support once again. We saw the price posting, well, staging a clear rebound around this territory, so a move back below this could discourage investors and could activate first selling, likely towards the 105,000 and then towards the 102,075, where the 200-day moving average is placed. So that's everything I wanted to share with you guys. If you like my analysis, please subscribe and like my video. I will be back soon with more technical updates. So bye bye for now and see you next time.